It's about that time of day again. My name is Joseph. Thursday evening, October 5th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude oil is bullish with a spike in channel, telling me to look for a retest of the high, but a key level of yesterday's session is telling me to wait for a seller failure before buying more tomorrow. The S&P is bullish after running higher this morning, yet just a little bullish on the ES, and a spike in channel is telling me to look for a two-legged pullback for more buying opportunities on Friday morning. Speaking of Friday morning, Nasdaq is bullish as well and trying to finish channel rotation, which tells me to be ready for one of three possible trading scenarios tomorrow. And of course, gold is bearish with a measured move and channel rotation. Boy, we called that from last night's newsletter. This tells me to look for selling opportunities, but only after a two-legged correction off the lows. And of course, the euro is bearish as well with a deep spike in channel. And my plan is to look for selling opportunities using the reversal line and the battle zone tomorrow. Boy, we had some big moves in today's session. We got some big news tomorrow morning. And of course, we got some big trading opportunities setting up for Friday's session using some of those key reversal lines on the chart for tomorrow. As always, I got a great newsletter in store for you guys and gals tonight with plenty of reliable trading opportunities setting up for Friday's session. Before we jump in and put the plan together for tomorrow, though, don't forget the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come here to the blog at Sideways Markets and enjoy the full-length version of this nightly newsletter. While you're here, don't forget, join the mailing list. I'll send you an email every evening when that nightly newsletter goes live. Lower left-hand corner, don't forget to follow me on social, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice. Follow me throughout the week for important charts, links, and updates throughout the week. And speaking of charts, how easy is that? You can have all of the charts that I'm using tonight in the video on your computer for tomorrow. There's a link right below the video on the blog that will allow you to download all the charts and have them ready for tomorrow's session. And speaking of tomorrow's session, what are you waiting for? Grab that free pass in the upper right-hand corner. After you finish tonight's newsletter, make sure you come back to the blog here at Sideways Markets and grab that free pass. Come out and join me as a guest in the trade room. I'll tell you, you're going to learn more with me on that free pass for free than you will anywhere else on those paid websites that litter all the YouTube channels these days, right? Grab that free pass in the upper right-hand corner. And don't forget, I'll see you guys tomorrow as a guest in the trade room. Speaking of which, let's get ready for tomorrow. Let's jump in. Tomorrow's Friday, October the 6th. We have no major news in the overnight session. It honestly really doesn't matter because all eyes are on the employment number tomorrow morning at 8:30 a.m. Eastern Time. I've been talking about this all week. We knew this afternoon would likely be a little bit wacky right ahead of that news number tomorrow, and we definitely got exactly what we expected. Tomorrow is Non-Farm Friday, the first Friday of every 1 month. 8:30 a.m. We get non-farm payrolls, right? The employment number. That's the big news tomorrow. That's the most important news on the calendar. Anyone who tells you different is either lying to you or naive, right? That is the most important news for tomorrow. Most important thing on any time we see a Friday, we always know early in, early out, because at the end of the day, at the end of the week, and at the end of the month, we know that traders take bigger risks. So as we get later in the day tomorrow, it becomes the end of the day and the end of the week, right? And if you made a bunch of money this week, now you're riding high, all loosey-goosey on your rules, right? Traders take bigger risks when they're up on the week. And, of course, if you're down on the week, oh, boy, this brings back bad memories. I remember vividly being way in a hole on a Friday afternoon and trying to dig myself out of that hole. And, of course, you know what happens. You end up digging yourself deeper, right, into that hole. Yeah, rule number one on a Friday, if you're in a hole, stop digging. Stop digging. But we do expect there to be some extra risk-taking tomorrow as traders gamble, trying to make back their losses for the week. So get at it early. Get out of there early. Anything after 11 o'clock on a Friday, you're really going to have a good reason to be trading, in my humble opinion. And what you really want to be thinking about tomorrow morning is before the news comes out is highly, highly suspicious because there aren't going to be any big whales out there in the market tomorrow morning, not before this big news comes out, right? Anyone who's floating a big position with risk on tomorrow, ahead of that number tomorrow, right, they're playing with fire. So a lot of most professionals will have a very small position, if no position whatsoever, going into this, right, monthly jobs number. Now, that all changes, of course, after the news comes out tomorrow at 8:30 a.m. Eastern Time. In my experience, after the news comes out, the market will either go too slowly or too fast. It's usually one or the other. And you usually have to give it about 10 minutes after that news comes out. Now, notice I'm not telling you to trade the news. Okay, promise me, guys and gals, you're not going to make the same mistakes that I made 10 years ago early in my career, right? I know. News oftentimes produces big moves. But unless you're in the market ahead of that move, don't be naive. You're not going to be able to get in until the tail end of that spike up or down. By the time you're getting in, everyone's getting out, and you're the one that's left holding the bag. So be very careful trying to trade news, right? We never trade news. We trade a few minutes after the news comes out, right? So again, don't be a hero tomorrow. And as I go over the charts tonight, I want you to remember that we're expecting a big shot in the arm tomorrow morning, right? And this market could really do anything, right? It's very difficult for me to predict. The bottom line, though, is there are really two scenarios to prepare for tomorrow. Either the number comes out as expected or it comes out outside of expectations. If it comes out as expected tomorrow morning, right, then the market's already priced this news in, and it will usually end up trading very slow. So if we see, and again, I don't really care about what the headline number is. I'm not even going to know the number tomorrow, right? I take a lot of pride in the fact in our trade room that I have no idea what the news is. I know when the news is. That's all I need to know, right? Whether it comes out higher or lower or as expected, that is irrelevant, unactionable information, right? The sooner you understand that, the better. It took me a few years to realize that, by the way. I hope you won't waste that much time as I did. So the bottom line is, if the number comes out tomorrow morning and it's as expected, okay, within expectations, you can find the number they're expecting on any financial news website, right, such as Econo Day, which is what I'm using right here, it will be very slow. But if the news comes out outside of expectations, right, either higher or lower than what they were expecting, then we usually get a rush of volatility as traders, right, then execute plan B or plan C. Okay, so expect either very slow if the number comes out as expected, or very fast if it comes out outside of expectation. Now, again, it doesn't matter whether it's slow, it doesn't matter whether it's too fast. Both of those situations I don't want to be trading, right? So I'll recommend against it for you as well. So give it, I'm going to say 5 minutes, right? But, you want to be patient after that news comes out. Oftentimes, the market takes on a completely different personality after the employment number comes out that first Friday of the month. So tomorrow morning, we'll be in our trade room at 8 o'clock Eastern Time. We're going to see what happened overnight. Usually there isn't much that happens overnight. Usually it's a relatively quiet overnight session. Last time we saw a non-farm number, it was pretty active overnight. So, you know me, I always just tell my clients, we'll see. We'll see what we get. All we know is tomorrow morning we'll come in, we'll see what the overnight session did, update our charts, wait for the news to come out, and then 10 minutes later, we'll know more about whether or not we've jackknifed in the opposite direction, right, or whether or not we're continuing with the plan that we develop tonight, all right? So promise me, no being a hero. I don't care if we're bullish tonight, right? If this thing tanks tomorrow, I don't want to hear anybody, I don't want to get any emails or comments on my YouTube channel about, well, you said it was bullish last night, so I just bought. No, wait until after the news comes out, see how the market reacts to it. If this market's running higher, do not sell into a runaway bull market. Do not try to fade a runaway bear market, right? We need to wait and see what this news comes out tomorrow. Because, again, right, it could be a very, very sluggish day tomorrow if news comes out within expectations, or it could be a very, very volatile day tomorrow if the news comes out outside expectations, okay? So hopefully I've scared you a little bit there. I know that was a bit long-winded there. You only got to put up with that from me once a month, okay? I promise, right? So you got another month until you hear that rant again. Let's jump in now. Now let's do the best we can with what we have available. Tomorrow, again, it's who knows, right? It's very big question mark for us tomorrow. So we'll start with crude, then we'll go S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Crude is bullish with a spike in channel, which tells me to look for a retest of the high. But we're trading on top of yesterday's high. These purple lines here, yeah, that tells me that sellers will likely try fading this move back down to the prior week low. My plan for tomorrow is to expect a retest of that high, but I'm looking for buying opportunities after the sellers try to run this price lower. I'm going to use that support trend line and that prior week low as key support levels. If price runs higher, I want to avoid buying above 50.92 because, well, let's be honest, that's where I would be looking to sell. So my plan is to look for traps and seller failures if price shoots higher without pulling back further to avoid buying into that resistance area tomorrow. Here's what we do know right now, right? And there's a lot of unknown here because we're sitting right on top of that prior day high, right? The prior day high and the prior day low, these are areas that just traders do weird things around them. People love to sell the prior day high because it's the prior day high. At the same time, when we break above the prior day high, a lot of foolish breakout traders think we're going to yesterday's, right? We're going 2 days high, right? And they buy the breakout. So the bottom line is, right, we usually do get a little bit of chop and slop around that prior day high. So it's really not a great place to enter trades. Great place to exit trades, right, once we get there, but not a real great place to enter because sellers are trying to fade back down to yesterday's low. Meanwhile, buyers are trying to go back up to retest the high. It's a little bit of confusion, and that confusion makes it a little bit difficult to use a small amount of risk. So because of where we are, that puts me on red alert. And of course, being ahead of tomorrow's major news, right, I'm really cautious around this prior day high. Here's what else we know. We know we have a very strong move in one direction. Okay, anytime we see a strong move in one direction, I always look for a two-legged pullback and a retest of that high. Right? I'm going to sound like a broken record about that because I've talked about that almost every night on our newsletter. Here's what else we know. We also know that we have this rising support trend line, right? That rising support trend line obviously is going to act as support. What else do we know? We know we have the prior week low. The prior week low has been, well, it's been deja vu all week. Ever since Monday, Tuesday, Wednesday, and now Thursday, we have seen this prior week low. So what I'm going to do is I'm going to combine the fact that we have a strong move higher. I'm going to combine the fact that we want a two-legged pullback along with that prior week low, which just simply can't seem to shrug off this price, along with that rising support trend line to formulate a plan to be a buyer going back up to retest that high. Now, of course, that's the easy part, right? If price pulls back. Price pulls back, I'm going to look for this as a two-legged pullback, try to use that trend line, right, the support area, and go back up to retest those highs. The challenging part is what if price goes higher? Now, one of the many things that we do every day, which I think we do very well in our trade room, is I try to introduce the idea to all my clients of put yourself in the other side of the market shoes. You know, we're buyers right now, but what if you were a seller? I know you're not, but pretend you don't know how to read a chart and pretend that you were looking to sell. Where would you be looking to sell? Well, if I was looking to sell, I'd be looking to sell right up here, right? That'd be a nice little trap high, right? A little trap high, sell back down. You know, heck, we got this rising support trend line. And as I mentioned on gold last night, which worked out perfectly, by the way, right? Sellers are not going to want to sell into that rising support. So what will they do? They'll look to sell up at resistance to free up some open space. If you missed last night's newsletter, you definitely have some homework this weekend to go back and watch it because it's a great tutorial from last night's newsletter on that spike and range setup. So I'm expecting sellers above 50.92. So now let's say we don't get that deep pullback that I'm looking for tomorrow, right? Let's say we run higher here. Wrong place to be buying, right? Because when you buy, you're now going into an area where it's nothing but sellers, right? Anyone who bought down here, they're about ready to take their profit up here. They become sellers, right? Buyers become sellers and they take their profit. Okay, also sellers are trying to escape this trend line. They're trying to sell up there too. So I consider this to be buying high. And anytime I find myself in a position where the only option is to buy high, what do I always preach? I know it sounds like preaching, right? What do I always say here in the newsletter? Traps, right? Traps, traps, traps. So as we try to go higher here, And obviously we'll know more once we get up here, right? But I'm looking at a pullback, right, for a trap low. This is one of those opportunities where you're going to have the protection of that rising support trend line. Sellers aren't going to want to sell there, right? So there, again, sellers will sell here. And right about when those sellers are getting ready to take their profit, guess what you're going to be doing? When the bears become buyers, you're going to be buying as well. What a great week it's been. Hope you guys have learned a lot. I hope you use it to earn a lot tomorrow. I hope I see you tomorrow inside the trade room. We'll be there at 8 o'clock Eastern time. We'll wait for the news to come out, get our charts all ready, and then it's off to the races. And don't forget, early in, early out, early in, early out. And last thing, Monday's a holiday. Next Monday is Columbus Day, right? Columbus Day. What a funny holiday, right? What a funny holiday, right? Kind of knowing what we know now about history. Isn't Columbus Day kind of a funny holiday? I can think of a whole lot of other better people to recognize than Christopher Columbus. But hey, we'll leave it alone. We get a day off, right? The bottom line is, right, markets are open on Monday. Markets are open on Monday. Be aware of that, although banks are closed. So it'll be one of those kind of weird half-day, low-volume days, all right? So I won't be here on Monday. I'm going to be celebrating my Christopher Columbus all day long with family and friends here in Los Angeles. I hope you guys will as well. So early in, early out tomorrow. Be careful if you choose trading on Monday. I'll be back on Tuesday evening with the next newsletter. And, of course, I'll be here tomorrow with all of our advanced members. Guys, thank you so much for being a great group. Keep in touch. I'm always here. Don't forget the free trial on the homepage of schooloftrade.com. Don't forget our beginner, intermediate, and advanced classes. And don't forget to hit me up, right? And I don't want to hear if the Patriots lose tonight. I don't want to be getting any trolling on my live support. Okay, keep it to yourself, will ya? I'm having fun with you. Hopefully it'll be a good night tonight. Have a great evening tonight. We'll see you tomorrow morning. Adios, amigos. Bye bye for now.